we're joined in the studio by Sandip Sabharwal from sandipsabharwal.com. Sandip, let me try and contextualize all that's played out. And among the major developments, you had InterGlobe Aviation, which came out with numbers. Now, this is a stock which has corrected. It's a Nifty 50 counter. It's a virtual monopoly, 60% plus market share in the Indian skies. And we've seen a correction. We've spoken about this in the past where you said it's a good opportunity to buy. That was at around 5,000 rupees a piece. Now it's at 4,900. One, what do you make of the numbers? And what's your conviction even now on the stock? Continue to hold?
Yeah, the numbers were decent in the context of whatever happened because the disruptions were significant. Then there was a forex impact, then the labor code impact, which has impacted most of the companies this quarter. Even after that, they have reported a profit, and they have also guided for decent growth despite the kind of restrictions which have been put on them. Now, in all probability, it's very tough for any new airline to come and take capacity. Even for the existing ones, it's very tough. So, because airlines is not a business in which you can just get in, and new airlines will not come. Who will come? Because initially you will have to make at least a 500 to 1,000 crore loss before any significant impetus or growth in business happens. So my guess is Indigo is going to dominate the Indian skies for many years, and subsequently as India becomes much more prosperous and all, we might see some more airlines come in, which is fine. And which airline would also have a nearly 40,000 crore cash in the balance sheet, zero debt, 40,000 crores cash, so they are in a significantly strong financial position. Without these disruptions, this was one stock which was not correcting at all. Today it's down 20%. I think it's reasonable valuation. It's not very expensive.
Yeah.
And obviously there are two parts to it. One, the overall market should stabilize and start to do better. And then I think InterGlobe from here on should be an outperformer.
Okay. Sandeep, shifting focus from that, let's talk about IT and mid-cap IT in particular. We've got numbers from Coforge that are looking weak. Signed numbers look largely mixed to inline. This time around, from the larger caps, we've not seen a performance that's all that bad. In fact, some companies have done really well for themselves. This time around, do you think, A, we're looking at a revival in the overall IT space, and B, if yes, would it be the large caps that take the lead compared to the mid caps?
So valuation wise, I think the large caps look much more reasonable than the mid caps still. The results have not been as great for many of the IT companies, but I think the good part is this is the first time we've seen order signings, etc. pick up after a long time. So I think that's one positive signal. Plus the currency obviously helps them improve or sustain their margins. So I would think that the sector overall should be a neutral, but specific stocks could do well, but this is not a sector where you invest to get 20-30% return. This is a sector which is a 10-15% kind of return sector now.
I wonder what you make of this IIFL saga that's playing out. I'm not sure if you've had a chance to read it, but if you have, good opportunity to buy NBFC name. It's known for the kind of value unlocking that it's done with regard to its wealth management, securities business, and now obviously there's some concern with regard to the NBFC or the lender in particular, but it's not trading at a particularly high multiple.
See, in any other sector except for financials, I would say that if there's some bad news which creates a correction, you should buy. In financial, you should never buy bad news, because in financials, what is in the balance sheet, what will get disrupted, and how maybe do they have to pay higher tax, do they have to do more write-offs, the entire thing. So never catch a falling knife in financials is my advice.
Okay, so clearly not touching IIFL, but Sandeep, I also wanted your opinion on some of the jewellery counters. We've seen a correction, especially where Kalyan Jewellers is concerned. Now, rationalize this for us. This is a strong franchise, technically speaking. Gold, in terms of the gold pricing, as it goes up, the gold making charges are a percentage of the price, and therefore typically it's a clear inflation hedge, and enjoys that tailwind, especially in a country like India. Kalyan Jewellers, this kind of correction again we've seen over the last few days in the stock price, does it look attractive to you?
See, I've been always wary of this counter because empirical data, like even if you go to any Kalyan Jewellers stores, etc., we never see any customers there. So there is no sale happening, but they continue to report strong numbers. Okay. So I've been skeptical of the company. Okay. And that's one part specific to the company. The second part is that the overall jewelry and silver product demand has completely collapsed with this rally, the recent rally which has happened. So there is demand for gold coins, gold bars, silver bars, because people are speculating on that. But as far as the actual consumer demand is there, that's completely collapsed for now. It might revive going forward, and I think that could be another factor playing on the jewelry companies.
Kunal, how is this one looking on charts?
See, I think the only thing which has been very interesting for Kalyan Jewellers is the weekly charts. What's happened is, after this 18-19% correction on the weekly basis, the stock has come back towards below the lower end of the Bollinger Band on the 3 standard deviation basis. That level is around 400 for the stock price, and the stock is at 375-ish levels, which means that there is a gap of 25 points which the stock has to fill to come back above its key standard deviation. So I would sense that potentially in the next 1 week, there should be at least a 25-point rally for the stock price coming closer to that 400 mark, where the stock price should settle into.
Okay, a 25-point rally is something that we're looking at for the week to come. But put that in context with the 120-point cut that we've already seen in the last 7 days or so. So yes, sharp correction on Kalyan. But on that note, viewers, time to slip into a very short break, and we'll keep talking about more stocks that could be in focus today on the other side. Counter sharp correction in the Nifty Realty Index so far. Even on a day like yesterday, where the market managed to do pretty well, Realty was still under pressure. What is ailing the sector right now? I understand that there's been a mixed bag of numbers. Updates so far have been strong, but the earnings that we're getting are looking slightly on the weaker side. Talk to us about your outlook here.
See, a lot of the reported earnings in real estate is not the way to look at it. So I think you have to look at what sales data they have, what are the future sales proceeds which will come in, because of the way the accounting works, the quarter-on-quarter reported profit looks different. So I would say that the negativity in the real estate sector overall seems to be excessive at this stage. So right now we don't own real estate stocks as such, but I would be looking to buy some of the good ones in this kind of correction, like stocks like, I think, DLF with its strong balance sheet and now a zero debt position, strong cash flows and decent sales data looks well placed. I think some of these other companies like Godrej Properties, Prestige, etc., I think also have come to decent levels. So I think some of them are in buy zone, I would think, at this stage.
Okay, and DLF is a stock that you spoke about, and DLF also going to be in focus today on the back of its earnings that were not all that bad, because on one side you did see a falls in new sales bookings, but on the other side, look at their debt picture, look at their top line growth. It's all looking fairly robust for the company. Rabinder is joining us with all the number crunching on DLF. Rabinder.
Well, as DLF reported a weak set of numbers in Q3 FY26, where company reported revenue at 2020 crore as compared to 1529 crore, which was up by 32%, but it was the below estimate of rupees 2356 crore. And if we talk about the PAT, then companies reported a PAT at 1203 crore as compared to 1058 crore, and which was above the street estimate. And net new sales booking were sharply lower as 410 crore as compared to 12,900 crore year-on-year basis, which was down by 97% year-on-year basis, and which was below the street estimate, as street was estimating a pre-sales of rupees 1,000 crore in Q3 FY26, and as a result, a 9-month FY26 sales stood at 16,176 crore, achieving 74% of the full year FY26 guidance of 22,000 crore. And management said that the sales were impacted as new bookings at their Dahlias were kept on hold during Q3 due to redesign aimed at enhancing customer experience, with booking now resuming in Q4 FY26, and collection remains strong at 5,100 crore, which as compared to 3,116 crore, registering a 64% year-on-year growth, and management indicated that a strong visibility of new launches in the near term, which should support sales momentum going forward. And the company reported a strong cash surplus generation of rupees 3,876 crore, enabling its achieving its state goal of gross zero debt. And on the rental side, DLF operational portfolio stand at approximately 49 million square feet with an occupancy of 94%. And post the result, brokerages has a mixed view where CLSA has downgraded a stock to accumulate from buy and cut target price rupees 860 as compared to earlier target price rupees 1025. And Morgan Stanley has maintained their overweight rating with unchanged target price of rupees 900, and Jefferies has maintained their buy rating with target price rupees 1000.
Okay, Ravinder, thanks for taking us through that. I'm going to slightly concur and say DLF doesn't look all that bad. Yes, because the pre-sales have taken a knock, sure. But take a look at their debt book. For the first time ever since their listing all the way back in 2007, they've turned gross debt free. So that is a big positive coming in for DLF. The cash on their books at around 11,000 odd crore rupees, if I'm not wrong, that also looks rather robust. So looking like a mixed bag for DLF. Yes, indeed, like Ravinder was mentioning, there has been a cut from CLSA on DLF, but it's Jefferies, it's Axis Capital and Nomura that have continued to maintain the rating. Nomura is neutral, but Jefferies and Axis Capital continue to maintain a buy rating with an unchanged target price. So at least, yes, that's the kind of reaction that we're getting from brokerages too. Kunal, talk to us about how some of the bigger names in the real estate space, like a Prestige and a DLF, how are they shaping up on charts? Prestige has been a fairly volatile one, let's say in the last 1 to 1.5 years, went all the way, I think it went north of 2,000 and then it's come all the way back down. What's your take there?
Yeah, so I think most of the stocks, Prestige, maybe not Prestige, but I think Oberoi Realty, Godrej Properties, DLF, I think they've gone through a very sharp correction. I think maybe the reason for that would be that stellar returns which the Nifty Realty Index clocked in 2024. I think it was almost like 130% plus for the Nifty Realty Index in that year, and that played a lot of heaviness to the stock price throughout the fag end of 2025, and I think start of 2026 also. I think you're seeing many of these stocks dragging. Now, what's concerning is that many of these stocks, DLF, etc., Godrej Properties, even Oberoi Realties to a larger extent, I think all of these stocks have come back towards weekly and the monthly chart breakouts, and these are sharp breakdown patterns which you're seeing for the stock prices. So that doesn't mean that the structure has changed significantly for the stock price, but it's just that the stocks will have to do a lot of efforts to try and break past about these immediate, weekly, monthly hurdles for themselves. So I would probably be on a wait and watch mode for the Realty pack. Let the stocks confirm a breakout on the higher side. That's where I think one should try and chip in.
You also have a couple of lenders, Sandeep, which have come out with numbers, something like to the likes of a Credit Access Grameen. They've continued to, the stock has continued to surge on after the kind of numbers that they posted. Now this trades at maybe 3 times book. It's Microfinance. Then you had a Bandhan Bank as well, which came out with numbers yesterday. Do you believe that some of these microfinance stroke MSME based lenders could well come into focus given the kind of tailwind which we might see in FY27, because slippages have started to come off? So for example, in Bandhan's case, fresh slippages actually came off by 20% sequentially, both YOY and sequentially, but sequentially being the key here. Do you believe that maybe some of these names could well come into focus?
Yeah, so I think there's a general view that the slippages on the microfinance size have reduced, and from next year growth could be coming back. So I don't specifically track these two companies, but I think overall from the companies which suffered due to the microfinance book, from next year onwards, that could potentially become a tailwind. So I think people who are looking at that, obviously that could be an opportunity.
How would you play it? Would you play it at all, or would you just stay away?
No, I wouldn't be specifically looking for microfinance opportunities.
Okay. Then where within lenders are you finding opportunities?
So I think on the large cap side, so these are standard banks, like you just keep on buying them whenever there's a dip. So something like a ICICI, Axis, SBI, we hold. Even HDFC after the recent correction is not looking bad at 920 odd levels on the large cap side. And on NBFCs, we've talked of like the stocks which we hold, like Mahindra Financial, L&T Finance, as well as Manappuram Finance. So I think we hold these, but I think there could be opportunities in some others also, like the CV cycle is looking good. So CV lenders could also potentially offer opportunities.
Yeah, Shriram's numbers will be expected today. And in fact, talking of CV, Ashok Leyland, they now say that the new product launches will be key to its ambition of becoming a top 10 global commercial vehicle manufacturer. Management has also flagged strong support from the government capex and infra spending. They're expecting double-digit growth in heavy commercial vehicles in Q4 as well as in the next fiscal. In fact, you saw a 5% rally in the stock yesterday itself. In fact, listen to the management and listen to what they had to say.
If you look at past of Ashok Leyland, we were always seen as company which always believed in innovation. We had many new products which were ahead of time were introduced by Ashok Leyland. Like we spoke about multi-axle vehicle, we were the first one to introduce that in India. Similarly, tractors, we were the first one to introduce tractors in India. So we have a rich legacy. Okay. And talking about this our ambition, this is our vision. We need to be a top 10 global CV player. We would like to achieve it by creating new products which actually work in terms of TCO for our customers, and that is how we have looked at these two brands. Hippo, जैसा मैंने आपको पहले भी बताया था कि हम प्रेस ब्रीफिंग में, Hippo जब इंडिया में था, तो Hippo was known for a product which was highly reliable. Customers को मालूम था कि इस Hippo को कितना भी वो उसके ऊपर बोझ ला दें, Hippo will never ditch them. Hippo will continue to run, कैसा भी terrain हो. तो जितने भी इंडस्ट्रियल सेटअप से वहाँ पे जो भी हैवी मतलब इक्विपमेंट की जो मूवमेंट होती थी, Hippo was seen to be the right product to serve those requirements. So that is how Hippo was created, and our idea was to introduce Hippo in a new avatar, again with with 360 horsepower and 320 horsepower, and we talked about Hippo, which is going to be operating with 1600 Newton meter. That's one of the big, highest torque. Torque का मतलब होता है गाड़ी में कितनी ताकत है वो लोड को बिना किसी उसकी जान टॉर्क होती है, टॉर्क ऑन द व्हील हम बोलते हैं. तो हमें ये लगता है कि अब इंडिया इज़ रियली ग्रोइंग, गवर्नमेंट का कैपेक्स चल रहा है और मतलब we can see growth all around India, and that is where these kind of trucks will play their role in terms of really helping the operators to go through this kind of growth. Okay.
Kunal, if I can ask you with regard to these CV players, I know that Tata Motors CV you'll have very limited charts, but what about an Ashok Leyland? What about a Shriram Finance? How do you play the CV cycle?
I think Ashok Leyland has been a breathtaking stock, frankly, because over the last 2 years, I remember, I think, tracking the stock pre the special set for Ashok Leyland. The stock used to just about trade at the 130, 140 band, which means price adjusted was close to 70, 75 for the stock price. But then the stock has done remarkably even in the last 2 years, from being a stock which was very, very sideways to being a trending stock, and that too, I think, at a point where the stock has completely changed the beta for itself, devoid of the overall market scenario. I think the stock has done remarkably well in that sense. Continues to look very strong on the long-term charts for Ashok Leyland. Shriram Finance also, I think, has been another stock which has done reasonably well. The stock is holding on to that 1000 mark, 985, 975, I think, was the recent swing low for Shriram Finance on the lower side, and then closer to 1020, 1050 is where we've seen the stock just about navigating towards a resistance. So it still looks very strong on the medium to long-term charts, and specifically with the last, I think, 1 month or 2 months back price breakout which you've seen for the stock price, there was a huge jump in volumes for Shriram Finance on the back of certain news flow. I think post that, I would believe that the base has shifted significantly higher for the stock price.
Sandip, we've seen the Nifty get into a mild correction. We've seen a couple of percentage points in terms erased over the last few days since the last time we spoke to you. You reckon that this is an opportunity, especially in the large cap basket? Also, how do you look at mid and small? Where do you believe that the pocket of opportunity lies, maybe from a 2-year perspective?
So right now, I would think that a pocket of opportunity lies in mid caps and then small caps. Like small caps tend to be more volatile, and then large caps, because I think the extent of correction which we have seen in the broader market is much more severe. Although the broader market index purely in terms of the mid cap index might not have fallen as much, but I think specific stock sectors, many of the stocks like so many stocks have fallen 50-70%. Although some of them might not recover because they were just story led, and those might not recover. But I think many others would.
Give us some sector stocks. Give us a flavor of what you're thinking within mid cap and small cap.
I think some of the consumption names, consumer durables, non-durables, those could be sectors to look at. Some infrastructure construction companies, those are also looking cheap, so those could come back. And overall, I think some of the NBFCs, etc. So we could see opportunities there. Some smaller banks could also have opportunity. I don't buy smaller banks, but then for people who buy, I think opportunity could be there. Right now, I think broadly we've seen a severe sell-off, so there could be significant opportunities for people who could be patient for 18 to 24 months.
Okay, Sandeep, really appreciate you joining us this morning. Thanks so much for your time and your views. Viewers